At this point, I would say it's pretty safe to say that governments do not like cryptocurrencies. The fact that they can't control them or regulate them kills them on the inside. Now, at the Aspen Security Forum this year, SEC Chairman Gary Gensler spoke on cryptocurrencies and 4 main areas that he had concerns with. The first being ICOs. Secondly, the trading exchanges themselves. Thirdly, he talked about stablecoins. And lastly, he talked about ETFs. In this video, we're going to be talking about what he laid out and his concerns and some talking points, in my opinion. While some people may say, screw the government, I don't want any interaction with them when it comes to cryptocurrency, we can do whatever we want. I think that's a little silly just because we live in a society and we probably do need some regulation. That way people aren't getting scammed.
You know, we're living in a society.
And, you know, you can innovate while also following rules. I just don't think everything should be, hey, we can do whatever we want, because in the end, as cryptocurrency gets bigger and bigger, if there's cracks in the infrastructure or the money that people are essentially using, this private money, it could hurt us in the long term if it's not addressed now. The idea is to go through the transcript and talk about the main takeaways, as well as sprinkle in my opinion with some examples as well of the concerns that Gary has. Now, to start off, let's just say my boy, shout out Nakamoto, and Gary isn't, you know, some random guy that doesn't know anything about cryptocurrency. He actually talked about cryptocurrencies at MIT as a professor, which is good because it's not some old guy that doesn't know how to use his iPhone. At least this guy knows what he's talking about when it comes to blockchain and has an understanding of it. Being part of the SEC, there's 3 parts to what they do. Basically to protect investors, facilitate capital formation, and maintain fair, orderly, and efficient markets. So it's really about protecting investors from hurting themselves. That's kind of the idea behind the SEC, whether you believe that or not, but that's the main point or main mission of the SEC. The first concern is over ICOs, or initial coin offerings, and the fact that Gary believes that they are securities, meaning that if they're securities, they should be regulated and there should be market oversight to make sure people or investors aren't getting ripped off. And I would kind of have to agree with them that there are definitely some coins out there that are questionable and are being created out of thin air. You just go to coinmarketcap.com and go to, you know, the last of the coins being created. Anyone can create an ICO out of thin air, right? You got Cousin Dogecoin, you got the Media Doge, Vitalik, Nuderin. I mean, these don't even make sense, but people are creating ICOs or coins out of thin air. It takes like 10 minutes and they can sell them to people without any knowledge of whether it's a scam, what the purpose of the coin is the Wild West. So to a certain degree, I think it makes sense. Okay, ICOs should probably be looked at to make sure people aren't getting rug pulled or scammed. I mean, you have people like Mark Cuban, who's a billionaire investor, and he got scammed on Titan cryptocurrency, which basically was a rug pull and it absolutely crashed to zero. So people like that can get hit. It's not just average Joes. My question is though, how are you going to regulate that? Because it's so easy to create these and the markets are all over the place over different exchanges. I agree with them. I just don't know how they actually regulate it. And the SEC website has a whole section dedicated to ICOs explaining how they're considered to be securities and basically to watch out for any promises that are too good to be true. So if a coin is saying, hey, you buy this and you'll make 100% each year, well, it's probably a scam, you know? So the SEC is basically saying, watch out for ICOs just because they could be potentially scams. Not all ICOs are scams, just potentially you need to know what you're investing in. The next concern was over crypto trading platforms or platforms that lend out different cryptocurrencies. And he even called out decentralized finance platforms. And really the concern here is that some of these platforms are not registered and there isn't really any regulation over them. So one day you could be part of this exchange, you could have hundreds of thousands of dollars worth of cryptocurrency, and then all of a sudden, boom, overnight, it's gone and you lost everything. Does that sound familiar? Well, it's happened a decent amount over the years. And over time, there has been more, I guess, trustworthy exchanges that, you know, follow the rules and are based in the US, but we had Mt. Gox completely fall down. And there's been plenty of instances where exchanges kind of fail. Now, this point is one that I agree with the most in that if you have a ton of money on an exchange, the exchange should be legitimate. Also, if the government works with exchanges, we could get to situations where they're backed by FDIC insurance, and we wouldn't have to worry about, oh, if something happens to the exchange, we'd lose all of our money. That would be nice to have on exchanges, because people are always worried, oh, well, if this exchange gets hacked, then I lose all my money in cryptocurrency, and that's why people love to put all their money on hardware wallets where you are your own bank, and there's this whole trust issue. Well, if you have some backing and trust behind these exchanges with the government, I think that will get people to actually trust exchanges more, and people may get even more involved with cryptocurrency that were scared to even touch it to begin with. The next topic was around stablecoins and how companies like Facebook are looking to create them. You have a lot of existing stablecoins that have a ton of trading volume on them. And the problem with stablecoins is there isn't any regulation or audits being performed on a regular basis to make sure that these stablecoins won't collapse. One example of that is Tether, where it's been called a scam. They didn't have an audit for years, and the fear was that all the money that they said was backing all the Tether created was actually fake, and that the company could be, kind of just making it up and taking everyone's money. So I would say for stablecoins, it is probably good to have some audits around that. The stablecoin discussion kind of cracks me up, because I think if the SEC was concerned about stablecoins and the government was in general, they could just create their own cryptocurrency, the Fed coin, whatever you want to name it. They could create it and essentially say, hey, this is the government issued stablecoin. If you want to trade it, well, here you go. Anything else out there could be a scam. And I think over time, if people trusted that and wanted to actually use it, they would use that stablecoin versus something like Libra or a random company creating their own stablecoin. The last point that Gary brings up is ETFs and investment vehicles that have exposure to crypto assets, and how right now they don't really have anything that exists out there. Now, this one, I don't feel bad for the SEC, because I feel like there's different companies that have been trying to come forward and create ETFs for years. I know the Winklevoss twins have been trying to create an ETF. A lot of different companies have been trying. So this one's on the SEC and the government in general of just not making it happen earlier. I think there is an appetite for creating that ETF. And for me, that's probably good, because the options right now, there isn't any guarantee that the actual value matches with what's behind the fund. Or you have pseudo funds, basically MicroStrategy, like a stock that has a ton of crypto. That is kind of a fake ETF. So it'd be good to see the SEC working with actual companies that want to bring ETFs to the space in a legitimate way. While Gary brings up some solid points across the board, that's a lot of stuff on their plate. They would need an entire army when it comes to the SEC in order to regulate the fast-moving Wild West markets of the crypto space, because the government tends to be slow and the crypto space is going like 200 miles per hour. All I have to say is good luck on the regulation side. In my opinion, the first thing that they should really target is the exchanges, because that is the one spot to onboard people onto cryptocurrency. And if people are getting ripped off or losing a ton of money when it comes to the exchanges, that hurts a lot of confidence. And honestly, that's probably where just the normal investor can get hurt the most. If you're investing in cousin Dogecoin or scam coin and you lose your money, I mean, I don't feel bad for you, but if you put your money onto an exchange that you thought was legitimate, like Coinbase, and somehow it gets hacked and you lose your money, it'd be nice to have the government kind of backing that up with some type of insurance. But yeah, now you know the main concerns from the SEC standpoint of cryptocurrency and kind of where they see the big areas that they need to target. If you did enjoy this video, give it a thumbs up and consider subscribing to Main Street Wolf, where we talk cryptocurrency investing, anything to do with money. Thanks guys for watching, and have a great day.